Hey, why are interest rates still high? And what happens if the interest rate goes down to 5.9? What's going on with the inventory right now? And what's going on with the overall real estate market? Well, I'm going to share that with you. Thank you so much for joining us today. Eric Hatch with this month's monthly market update. Let me share what we got going on. So you want to get a hold of me, there's some information you can reach out to me. Happy to connect. Scan that QR code as well. Subscribe to the channel as well. But let's talk about mortgage rates and kind of what is transpiring and what is drawing them up so high and kind of what's happening. Over the last 50 years, you've got this treasury, the 10-year treasury yield that you can see up here, that basically over this, that it's generally average about 1.72 points higher than the treasury bill is generally what the interest rate kind of rolls around. And that's what basically kind of transpires and makes and creates the interest rate. So let me share kind of what's happening over here recently. Right now in the January 2023, we were a full point almost over that at 2.7 is what we were. And now here we are coming into in May and June as the latest numbers. We're at 3.2. So it's continuing to open the spread of the interest rate, pushing us close into the 7% interest rates. So this doesn't happen very often. This is very rare in the last 50 years to actually even see this happening when the average is 1.72. So let me share that one of our economists here says the only times the spread approached or exceeded 300 basis points, which is about that 3%, was during the periods of high inflation or economic volatility, like those seen in the early 1980s or in the great financial crisis of 2008 to 2009. So you can see here when you look at the graph that we've only hit and gone over the 3 right here and through that little other one, and then right here is where we're at as well. So this is stuff that just doesn't happen very often. So let's kind of see what kind of is going to be happening soon and what we're kind of seeing, what other people are talking about this. It's reasonable to assume that the spread and therefore mortgage rates will react in the second half of the year if the Fed takes its foot off the monetary tightening pedal and provides investors with more certainty. However, it's unlikely that the spread will return to its historic average of 170 basis points, as some risks are here to say. So that was the first American chief economist there mentioned that. So let's look at this right here of where maybe if the interest rates where they were or where they might go. I'm expecting, they the Fed just held a meeting and said that they were going to hold. Maybe there's going to be another rate hike towards the end of the year, but and then we're kind of projected that it's going to kind of soften at that point. So here we got at the 1.72, generally speaking, if it stuck at the average, if the yield from the yield and took the average of 1.72, we should be having an interest rate of a normal interest rate of about 5.37. But we're not. The last numbers that actually came out here in the beginning of June that came out at 3.2 is where they're at on the spread. That is putting us right around the 7% interest rate. But can you imagine if we just took a point off, or if the Feds came down and released that a little bit more? If you imagine if they got down to a kind of a more, maybe closer to 2.5, it'd be a 5.9% interest rate. And I will tell you right now, if we had a 5.9% interest rate, the market would go crazy. There'd be a frenzy of buyers back out there, and then good luck trying to find a property and then see what that happens to the pricing and the bidding wars and going back into closer into the 2022 kind of market. So let's look at this here. So it is National Homeownership Month, and so it's really important to understand and celebrate that, which is great. So, but you can see that on the homeownership remains still the number one feature of American dream is still owning a home at 74%. Been able to retire at 62, successful career at 61, and college degree is 33. And these are all really tied together. More education that you have, more possibility of buying a home, and then possibility with that building the wealth is to retire. So it all really is tied into home ownership. So let's take a look a little deeper here on the next graph, that the Americans' opinion of the best long-term investment, guess what? There it is. Real estate, gold, stocks, bonds, etc. So 34%, they still feel, and that is the longest consecutive voted for the best long-term investment for 11 consecutive years was real estate and home ownership. Again, some benefits of home ownership: building equity, controlling over expenses. Can you imagine in 5 years if you didn't buy a home right now, or if you did, where your payment be. If you bought a home now, you control your payment. If the interest rate goes down, you control your payment, your refinance. Can you imagine about 5 years where a rent payment might be? Probably much higher than it is today. So, but control and building that wealth and having that strong, just privacy, property improvements, home office, health benefits, financial education. It just kind of goes on. Mortgage deductions, tax deductions, the profit from home sales. I look at my house that we bought over 25 years ago and where it's at, and the opportunity to be able to build wealth and opportunity to do the things that we want to do in our home to be able to build that wealth, and where the price is today. So again, 78% of Americans associate homeownership with the American dream. You got 43% of millennials and the Gen Zs are considering buying investment property, and 68%, where a lot of our buyers are coming from, is the Gen Z say investing in real estate is a smart financial decision. So I really like that. But where is the consumer um, attitude right now? Where is it at? And you can see the confidence in home ownership has weakened towards the end of 2022, and a percentage of Americans in each December, these are December months, of what they think the next year is going to be able to see, where they think that the prices are going to go. Are they going to go down? Are they going to stay stable? But in the last December's, prices will go down over the next 12 months. So in 2021, 19% of Americans thought the prices will definitely go down. 2020 down, but can you imagine what basically happened in those 2 years? Never went down. It accelerated, which I'm going to show you that soon. So you had a 37% in December, but what you can see right now is because getting out there and educating people, because people keep thinking that there's going to be this giant crash on real estate and where the prices are going to go down 20, 25, 30% down. And I'm going to show you why that's not going to happen. But 37% of the people thought, maybe they thought the prices were going to go down during the year. And now the new numbers have just come out. Now it's down to 32%. And so yes, 31, it was 31 in March, and then it's gone up a little bit more in 32. But let me share some more data with you. So let's talk about home prices here. An accurate look at home price movement. You've got several graphs here of the three best indexes, or most searched after indexes, most reliable indexes to actually look at kind of what's kind of going on. This is basically what transpired in 2022. Business was doing really well, houses were selling, and then the lights just turned off, and then it just kind of crashed down and went like 6 months here of price depreciation of homes. Check out what's starting to happen. Every month I give this to you guys, it's gone up. February, March. You can look at Case-Shiller, then you can actually look at the next one, FHFA, going up here again, and moving up, and then you got CoreLogic moving up, and so they're actually a bit bigger. So they all look at different data, but look at them all together. Do you see a trend? What's happening here? Do you see that we have 6 months right here? Do you know when the crash of 2008, around that range, it took 6 years for the prices, for the green bars to start coming back up? 6 years. This only took 6 months. Where's the crash? Where's the 25% to 30% decline in home prices and home values? It's just not happening. Too many people have lots of equity in their home, and so if they're get into some type of financial trouble, they're going to sell their property before they lose their property. So it's just not happening. The crash is not going. Now, are we out of the woods? Who knows? But at least you can see the trend that it's going green, and that the homes are appreciating, is what these three giant indexes are basically telling us on that. But then you can look at Zillow. What's Zillow saying? A lot of you trust Zillow more than maybe you trust these people, but that's up to you. But if you at least even see Zillow, they're actually seeing price increases happening in March and April, and kind of moving those green dots up. Now, it's going to be fun to see and continue throughout the year and kind of watch what happens there. But you can see Fannie Mae prices stabilizing, and then you got quarter over quarter percentage change in home prices. So they're actually seeing, and they go by quarters, not by by months. So you can see that their quarter here, they're actually out. Only took 2 quarters, that's 6 months same. Again, they're looking at different data, but they're all going green. So that's what's pretty fun about watching kind of what's kind of happening here. So let me just share a little bit about this. I know, guys, the pandemic, we call it the pandemic. Unfortunately, so much hardship, trials, tribulations, stress, loss of loved ones, of personal people that I knew that lost their loved ones, and relatives that passed away during that. And I know we always call it the pandemic, But let's maybe change this a little bit, change the narrative of this, and let's call it the unicorn years because it was totally different. So let's try to take in the real estate market of having it be, instead of in the index and discussion in the real estate market of calling it the pandemic, let's call it the unicorn years because there's so much data that's being shown and shared about, oh, the percentage of this, the percentage of this, but you just can't take the two best years of real estate and say anything but just the unicorn years. So let's take a look at this. Because if you can see home appreciation, the pre-unicorn years, you can see that we were 7, 5, 4, and now in 2022, 5%. But look at the unicorn years. Nothing we've ever seen anything in the history of real estate to get to 11 and 18% that quickly. So look at some of these other statistics and things that I want to share with you as well. That you got the pending. And so you look at the pending. People say, well, how many houses are going pending right now? What's going on with the pending sales? But look what you got in 2023. People are always asking me, well, are you okay? How's real estate? Real estate is busy. Real estate is great. People are still buying and selling homes. So you can see in 2023 on the pending sales, you can see if somebody does a statistic out there and hear the news that we're way down. Well, of course, because you can't count the unicorn years. You can go look at this and say we're right on track of 2020, 2019, right on about the same numbers going through on a year-to-year date from May of each year. So that's important to kind of look and not really pay attention to the negative news, but let's eliminate those 2 years there in the real estate terms. But then you look at this, the showing traffic, which is wonderful to actually see what the pre-unicorn years are, the showing index for March over the last 7 years. You can see right here what's happening. 2023, you are having more people going out and looking at homes. Why is that when the interest rates are so high? It's because there's more to buying real estate and where you want to live and your life than just an interest rate. So you can see that we are way high. Can you imagine if the interest rates jump or drop back down to 5.9, maybe towards the end of the year, the frenzy where your open houses and where the buyers are going to be, this was going to spike like no other. And then it will be very difficult because our inventory levels will absolutely be seeking more and more inventory that will just be on lower levels than we probably have ever seen. So that could possibly happen. So if you are on the fence of maybe looking to purchase a house, maybe you want to do it sooner than later so you can actually find a home where you can actually come in and have a little bit more bargaining power as a buyer to do it now. So let's continue. All right, we've got medium days. People were actually saying, well, the medium days of the houses, we're like, it's so slow to sell a house these days. Well, let's go back, take these 2 years out, because again, nothing like that of when you were selling homes on an average of less than 30 days, 5, 10, 15 days in the market. And look, pre-unicorn years, we are still way lower on when it comes to the median days on the market each year from May to May of the year of the new statistics that just came out. 2020, 62, 52, 51, 55, we're only 43 days on the market. So very low still. And you can see here on the home sales, you look at the home sales and go, well, of course, we're selling more homes here of the pre-unicorn days and years, but of May. So you can see that we are still a little bit low, still going, but we are climbing here to more normal numbers is what we've got there. All right, month inventory. People always say, well, how much inventory do we have? And say, we have so much inventory now. No, we don't. Our inventory is still really low. Yes, the inventory was super low during here, but look at this. It was average about 4 months worth of inventory in April to April, and we're still 2.9. So we're still lower than the monthly inventory that we actually had pre that. And again, people always ask me, well, where are all the foreclosures coming? Again, here they are. And so you can say that somebody's you'll hear a notice that historically they're going to say that foreclosures are up 50% or more than 50%. Well, can you see why? It's because there just weren't the unicorn years, because there was the forbearance and they unable to actually foreclose. So now that's out and done, you can see, unfortunately, there are some people that that are in that same issue and concern. Most people are selling their property and fixing that before it gets to that point. But you can see what their numbers are. way, way low compared to what before, this unicorn years came in. So you got to kind of have to look at that. So I want to share with you really here that there was a study that was recently done that was like people, when watching the news and hearing some negative news, like, oh, the market, oh, it's crazy, I don't want to buy right now because maybe things are going to crash, or I don't want to sell my home because I just want to stay kind of where I'm at. But after about 1,000 people were actually, after they spoke and studied in the study, that after they spoke to a real estate agent to understand really the true facts of kind of what was happening in the real estate market, what was going on with houses and buying, and still some really great buys. I have put so many people into contract in the last 60 days that are amazing, amazing deals. And we've also been able to get sellers who have gotten multiple offers on their properties and 20 to 30 to $40,000 more than what they were asking. So the market is still hot, still good, but 64% of those people, after they spoke to a real estate professional, felt comfortable that they would go ahead and buy and sell their home. So guys, that's where we're at today. That's where we're at with the market update. I hope that this helps you understand. Talk to a real estate professional. Please reach out to me, subscribe to the channel, hit the little bell. You'll get automatically notified when these videos pop out. Look forward to seeing you next month, and have a wonderful and great day. Take care.